All right, guys, let's get down to it and help make you some money. I like the rails. Kansas City Southern is my favorite long-term rail, but CSX really looks really good here. They reported that, remember, Norfolk Southern had a laid an egg. CSX had a much better margins, much better outlook. And I think all the negative stuff, you can see the chart's not necessarily a pretty chart, but we're all trying to buy this thing on a dip down here. And I think it found some support. So I like it down here. If you don't have KSU, if you don't have any rails in your portfolio, this is one I think you should consider. Matt, you follow this a little bit.
I do, and as I mentioned earlier in the show, I think the transports had a really good day today. They've pulled back quite a bit all throughout, from airs to the rail. I like CSX of the bunch, probably my favorite of them. And if you're going to buy it down here, up over 2.5% today. Strong day in big volume. That's a good sign.
Held in pretty good. All right, Constance, I mean, on one hand, the rails have historically been a proxy for the economy. Now, of course, many of them have been attached to coal over the last few years, and that's one of the reasons they've had some pressure, offset by those who are carrying tanker cars with the oil coming down from Canada and whatnot. So where are we on this? What do you think?
Well, and the other thing that's affecting them is the port shutdown and the West Coast. So now that that's getting resolved, I think you're going to see some good activity in the rails. And it's rail car loadings is one of those economic indicators that economists like to pull out and say, this is one of my secret weapons, is the rail car loadings. And it has been a good proxy for industrial activity.
And one thing we do know, barrier to entry is pretty tough.
Yeah, and
it's kind of tough to start a new one right now.
If you believe in our economy and that it's going to continue to grow over time, with bumps and problems, the economy is not going to grow without the rails growing.
No, the only thing I would add is how much this company has invested in infrastructure, increased dividends, paid dividends, and did some share buybacks. So it's a combination of things. They didn't just manufacture these numbers. They also made some real investments, and they continue to do it.
I think, is it next week when the government comes out with these new with the new guidelines for carrying oil? Because I think they're going to come out with new ones. I don't know how that will impact these. I do have an American rail car as a bet that they may do something drastic, like a double haul or whatever. We'll see. That could be a short-term blip for these guys. We'll see. Speaking